Well, Max-Keiser is a TV presenter, radio host, entrepreneur, broadcaster, and journalist. He's the inventor of the virtual specialist technology, prediction markets, Hollywood Stock Exchange, and a lot more. And he's had shows with, of course, BBC, Al Jazeera, Press TV, Russia Today, has 2 TV shows right now. He has a show Saturday mornings on the GCN radio network and a show on 104.4 FM in London. And he is our guest for the rest of the hour. And yes, I'll be taking phone calls. Max can talk about any issue you raise, but hopefully it'll be on some of the issues we're going to be discussing. The toll-free number to join us is 800-259-9231. Max, I know you've seen the comic relief in the news. In fact, give me a document cam shot, please, here. Recession officially ended in June 2009. Of course, all the mainline economists we talk to say we've been in a recession for at least 5 years. 2 years of a recession is really a depression. But we're talking about 4, 5, 6 years, depending on how you cut it. Now, the government's Cook numbers say 9.6% unemployment. The real number's above 22. You've just got massive systemic layoffs. You've got the greatest level of poverty, the Census Bureau admits, in over 50 years. But that doesn't matter. Alan Greenspan and others, a recession officially ended in June of 2009. The Great Recession, now it's the Great Recession, ended in June 2009, according to the body charged with dating when economic downturns begin and end. But the news comes amid rising fears of a double-dip recession. Now they're saying it's a double-dip housing market, but it never came back. And it continues here. The National Bureau of Economic Research independent group of economists released a statement Monday saying economic data now clearly points to the economy turning higher last summer. So 15 months ago. Max, next they're going to tell me that the moon is made of cheese.
Well, look, the way the economy is measured is GDP. And over the past 20 years, the amount of debt that has had been taken on is increased exponentially. So for every dollar of debt 25 years ago that produced $1 in GDP, up until 2007, it took something like $8 of debt to produce the same dollar of GDP. So the GDP masks the fact that for 25 years, the American economy has assumed hundreds of billions and trillions of dollars worth of debt. Starting in 2007 and then gathering speed in 2008, that debt implosion, of course, started to create havoc in the economy. Obama came in. They threw in some stimulus. They threw in a bank bailout that created a short-term ripple that lasted about 6 months. That ended. All the subsidies for housing are over. The make-work programs are over. The primary trend is this contraction.
And we're in even greater debt now.
That's right. The debt has increased. That's exactly right. The debt has increased. And it's increased to the point where central banks are doubting whether America will be able to pay its bills. Heretofore, ipso facto, they are buying gold. So central banks, for the first time in decades, are buying gold. Up until recently, they were net sellers of gold. Now they're actually buying gold. So this is another huge piece of the equation for gold. You've got central banks plus all that smart money in the hedge fund community, like John Paulson, like Paul Tudor Jones in the U.S. They're buying gold now.
And so gold is just $13, $14 away from hitting $1,300. Bloomberg reported, as you know, Max, 2 weeks ago, that the most popular futures option on gold in the month of December in New York and Chicago is 1,500 smackers. And even mainline Reuters and CNBC are saying people are doing this because even if it's not made public, quantitative easing is accelerating, money printing is accelerating, that the monetization of debt is accelerating. What does, A, how high do you think gold will go before Christmas? And B, what does all this mean to the real economy?
Well, since I've been on your show, really I have 2 main themes, gold and the casino gulag. Gold certainly is benefiting now from what I saw and what others like Bob Chapman on your show have seen. There's a breakdown of trust in these banks and in these economies around the world. and they're being net buyers of gold. Ultimately, this means that gold will be a factor again in terms of backing the dollar, or some let's say if it does back the dollar, you've got roughly 1.7 trillion in what's called M1, the most readily accessible money component in the U.S., divided by America's gold supply. If they monetize the cash into gold, that we're talking about $5,000 an ounce. Jim Rickard, who's an excellent commentator, he's on CNBC all the time. He used to work on Wall Street as a credit analyst and as a guy who monitors all of the bank regulations for banks. He's a very knowledgeable guy. He made the case for $5,000 an ounce gold this week. It's a very compelling case.
And they're also making $50 an ounce silver.
Well, the old high on silver was 50. If you remember the Hunt brothers back in the 80s, they made a run on the cornering the silver market. It got to 50. But I think, sure, silver is going to break out. And it's an interesting play because it's both an industrial metal as well as a precious metal. And I just look at the gold because this is the one that the central banks and the global economies and the global currencies key on the gold market. On top of that, if you can look at silver and say, yes, silver will piggyback gold and probably on a percentage basis outperform gold. But in terms of talking about macroeconomics, gold is the one issue that everyone has now got to come to terms with.
Now, correct me if I'm wrong from your research, but the central banks have tried to suppress the price of gold for decades because it competes with their fiat derivative counterfeit instruments. Now it appears that they're beginning to at least partially capitulate to the fact that gold is not going to be able to be suppressed.
Well, that plus another major factor is that the industry itself, the biggest producers of gold miners, the biggest gold miners in the world, have for the past 25 years had large short positions, or they were hedging their gold production books. These big producers are now closing down their hedged positions. They are now buying back all of their short positions. They're going all in. They realize that at the current cost, their cost of $400 or $500 or $600 an ounce to produce gold, it makes no sense to hedge their books at all. It makes no sense to hedge to sell short any gold. They totally don't believe now when they hear Wall Street and the central banks are going to try to lease out gold to keep the price artificially suppressed, as you just mentioned. So the industry itself is saying, we're all in. We're no longer hedged. We're buyers of gold. Hedge funds are big buyers of gold. Central banks are buyers of gold. Foreign governments are big buyers of gold. Now, the one buyer, the one absent in this equation is the retail investor. Less than 1% of the $1 trillion or so of investable assets around the world, less than 1% is invested in gold.
That's right. And when they finally come to the party, that's when we could see the $5,000 an ounce, is what the economists are saying. I mean, because they still remember the media saying, don't buy gold, invest in Enron. And they're still holding on to penny stock Enron and sending me emails saying I'm a kook. I said invest in gold when it was $260. Now it's up at $1,300. And they're sending me emails saying I'm a piece of trash. And I mean, they really believe in Enron stock.
Gold, here's the way to think of it, Alex. Gold right now is still in a bear market. It hasn't even started its bull market. Even after 9 straight years of 20% gains, compared to the gains that will come once this market gets hot.
And that's because they've artificially suppressed it for decades.
That's right. So you'll see gaps of $200, $300 moves in a day. That's what we're talking about. Then it'll be a real bull market. Then everybody will be buying gold. Then you're talking $5,000 an ounce. Then politically it'll completely transform economics.
Will there ever be a time to dump it?
Yeah, of course. But at that point, in other words, you want to be in a position where you can sell gold and you're able to buy assets for incredible bargains.
And that brings the new problem. They've got Democratic operatives, mainly, trying to come in and demonize the entire gold market just because of Glenn Beck. And I don't see that being effective.
Well, the federal government, as the price gets higher, it becomes more of a problem because it it shines a negative light on the system, the banking system, the fiat currency system. As it gets higher, you're going to hear about such things as, well, maybe gold should be taxed at an exorbitant rate as a way to try to control gold ownership. Of course, confiscation they've tried before.
But you've already paid taxes on the money that you used to buy the gold.
Yeah, but I'm saying that they could say for gold, this administration has incredible power. I mean, the Obama deception is, unfortunately, it's all too real. You know, they took all of the abusive powers of the Bush administration and they've repackaged it as the Obama administration. They've got incredible powers. They could simply say anyone who owns gold is a terrorist and we're going to tax you 90%.
Oh, yeah, they're set to pass amnesty this week. Nobody wants it, and they just say, we don't care.
So you can't put anything by them. There's no rule of law. There's no justice. I mean, so this is going to be the problem on the other end of the equation. Gold will go to 5,000. Then the problem is going to be the tax problem. It's going to be the confiscation problem. There will be other problems with it. It's not going to be a smooth sailing, and it's just not going to be a straight shot to 5,000 and game over. As always, all markets are always dynamic. There's a lot of things, a lot of moving parts, but clearly the trend for gold is higher.
When do you see it being 5,000? Answer that when we come back. Max Keiser's our guest. We'll get into England, and that's a trend they want to set up here, where all paychecks are seized by the government. No, you can't make this up. That's the headline at Infowars.com. British government to seize all paychecks. We'll be right back. Stay with us.